So the tax deadline has passed, and you might be wondering what you can do right now to save on your taxes next year. The great news is that right now is the perfect time to think about this, since we are about halfway through the year and you have plenty of time to implement any tax reduction strategies. If you want to reduce your biggest expense, then you need to make sure that you are actively tax planning. And don't worry, if you don't know where to start with tax planning, I'm going to break it all down in this video. Hey guys, Crystal A CPA here, and please do me a favor and give this video a thumbs up, and don't forget to comment your thoughts or questions down below. Also, if you're a business owner and need help with your business to permanently reduce your taxes the legal way, I created a 5-hour course that goes over the most efficient ways to reduce your tax bill. If you want access to the course and live Q&As with me, just go to mycpacoach.com to learn more. The link will be below. So first, I need you to understand what tax planning is. Then we will dive into some strategies. Tax planning is the analysis of a financial situation in order to achieve tax efficiency. Now, tax efficiency is what we all should be striving for because it ensures we don't overpay in taxes. Tax efficiency is when a taxpayer pays the least amount of taxes that is required by law. So tax efficiency is not illegal. And what tax planning does is analyze your financial and tax situation in order to achieve tax efficiency. So the goal of tax planning is to reduce a taxpayer's tax liability as much as legally possible. In order to accomplish this, a taxpayer would need to make business and financial decisions that would minimize the occurrence of tax. These decisions should be timely and occur in the tax year that you want to reduce your taxes, which is why you should be thinking about your 2022 tax return right now. And just so you know, tax planning is not tax preparation. Everyone prepares their taxes, but not everyone tax plans. Tax preparation looks at the prior year and applies what happened on the tax return. Tax planning looks at the current and future years to implement strategies that will reduce your taxes overall. Now that you know what tax planning is and isn't, now let's start talking about some tax planning strategies. The very first step to tax planning is making sure you are earning income. Yes, in order to effectively tax plan and pay the least amount of tax possible, you must be first earning income. Without income, you wouldn't owe any taxes and therefore would not need to strategize to reduce your taxes. So you must first have income. Now, the source of that income does matter. The source of income could be from an employer or W-2 income and business income. These sources of income are generally considered active income and taxed at a higher tax rate than passive income. Depending on the type of income you earn will determine the tax planning strategies available to you. However, a tax planning strategy available to all income earners is funding retirement accounts. I'm sure you know that if you are of working age, you should be saving at least a little bit towards your retirement. But did you know that there are tax-advantaged retirement accounts that can help lower your tax bill? From SEP IRAs for self-employed individuals to company-sponsored 401ks for employees. There are so many ways to save for retirement while also saving in taxes. Some considerations when using retirement as a tax planning strategy are your current tax rate, what your tax rate would be at retirement, do you own a business, do you have employees, and your annual income. But overall, when you contribute to a tax-advantaged retirement account, you are able to lower your taxable income and therefore reduce your tax liability. Even though the money you save towards retirement is still your money, just in a different account. The next strategy when tax planning is to maximize your deductions. Deductions are expenses that reduce your income. When your income is reduced, you owe less tax. So having as many deductions as possible is a good thing. When tax planning, it is so important to take full advantage of all of the tax deductions that apply to you. And believe it or not, most taxpayers are not even doing this. I've had previous clients who had legitimate business expenses in prior years who did not apply those expenses as deductions on their tax returns. And some taxpayers might actually be afraid to apply their deductions, or maybe they lack a bookkeeping system to keep track of those expenses. But maximizing your deductions is a guaranteed way of reducing your tax liability. Some examples of maximizing deductions include writing off your business mileage, choosing to itemize deductions if your deductions are greater than the standard deduction, or even taking the home office deduction. There are literally thousands of different deductions you could possibly take. The best way to maximize your deductions is to be able to write off expenses you would have anyway as deductions. So these are things like education expenses, cell phone expenses, or even choosing to hire your kids in your business. But the key here is keeping track of your expenses. Business owners should be doing this anyway with bookkeeping, but even if you don't own a business, you should have some kind of process for keeping up with your expenses. Another tax planning strategy is to own a business. There are so many more tax planning strategies available to business owners. Earlier, I mentioned deductions like business mileage and the home office deduction. Well, these deductions are only available to business owners. There's even the QBI deduction that allows certain business owners to deduct 20% of their income for no other reason other than being a business owner. Business owners also have the flexibility of choosing how their business income will be taxed by choosing their entity type, like LLC, S corporation, or C corporation. Each of these entity types are taxed differently, and if you choose the right one, can result in paying significantly lower taxes. Obviously, in order to use a business for tax planning purposes, you need to have a legitimate business that earns income. It cannot be considered a hobby. According to the IRS, a hobby is any activity that a person pursues because they enjoy it and with no intention of making a profit. So the profit has to be the intention here. Once you have that, you can begin to use your business as a tool to reduce your tax bill. The last tax planning strategy you can implement is health savings accounts, or HSAs. An HSA is a tax-advantaged medical savings account. The funds you contribute to an HSA are not subject to income taxes and actually reduce your taxable income. Even better, you can invest the funds you contribute to an HSA, and the gains from those investments are not considered taxable, as long as you're using the proceeds for medical expenses. A big reason why HSAs exist is to make healthcare costs much more affordable. So for this reason, you have to use the cash in an HSA for medical expenses. But with the increased cost of healthcare, that shouldn't be too hard, especially considering the wide array of expenses you could use an HSA for, such as for prescriptions and over-the-counter medications, contact lens, co-pays, vaccines, physical therapy, chiropractor visits, and much, much more. And unlike retirement accounts, when you withdraw money from your HSA and use it on qualified medical expenses, there aren't any taxes imposed. If for any reason you don't utilize all of the funds in your HSA, you can always roll it over to the following year. Now, there are limitations. HSAs are only for those individuals who have a high deductible health plan, and you can only contribute up to $3,650 in 2022 or $7,300 for families. All right, hopefully now you have a better understanding of tax planning and have some strategies in mind to start with. If so, please let me know in the comments and subscribe to the channel so you don't miss out on future videos. In the meantime, feel free to check out some of my other videos, and I'll see you in another one.